How are you guys? How are you doing? I hope you are doing well. I hope your week was fantastic and your weekend was awesome. This is Shocks and this is Shocks Capital FX. Today I'm back with a very good video for you guys. So we are going to look at a breakout strategy the right way. So I'm going to use a combination of trend lines and zones to determine where we get the best entries and how we should be looking at the best structures in terms of the breakout strategy. So we're not going to be looking at the conventional or what you have been used to in terms of the breakout strategy. We're going to look at something more. So guys, let me just illustrate what you're going to be looking out for in terms of the breakout strategy. So on this breakout strategy, let's say we have price moving like this. So this is how price will move. This is the price chart. So let me just so this is price, one touch, second touch, then we are looking for a break on the third touch. So we have one touch, two touch, three touch. So we're going to be using the notion that when a zone is hit many times, it is going to break eventually. So what we're going to say is if we have two touches on the trend line, we are going to assume that we are having what we call a weak base or a weak trend line or a weak breakout, right? So what we're going to be doing is we're going to be waiting for this breakout and we're going to be considering a breakout structure around this area. Then we're going to be looking for a breaker that breaks out, that breaks the structure in this area. So that breaker is going to be our zone of interest. So we are going to have something like this. We're going to have something like this as our zone. Then we're going to have this as our break of the trend line. So the zone, this is the breaker responsible for the break of some intermediate low here, right? So we're going to be looking for a move back to the zone and a collapse. So I'm going to be using these examples on how you guys can be finding entries and can be finding trades. So let's go to here. So this is GBP JPY M30. So let's start here. Number one, as you can see, we were trending downwards here. What do you see? We have, so first of all guys, it's market structure. Then after market structure, you connect the dots or connect the highs or connect the lows, whatever is easy for you. So as you can see, we have some kind of a channel here. This is a channel, right? Price channel, where we're having price going to the upper trend line, to the lower trend line, to the upper, to the lower, to the, so we're just waiting for the one that breaks first. Then we can wait for a retest on our zone or the trend line. So we are not looking for a retest of the trend line like this, what you guys are used to. Or let's just illustrate what I am trying to say. Let's say we are not looking for this kind of a trade where we are looking for a break and a retest of a trend line. So what we are looking for is a break of a trend line, a retest of a zone. You understand? So we want the trend line to break, but we want the zone to be retested. The zone can be an order block, can be a mitigation block, can be a breaker block. So I hope you guys know what an order block is, what a mitigation block is, what a breaker block is. So that's what we're going to be looking out for. All right, so this is the first touch. As you can see, we have the first touch here, right? That's the first touch of the trend line. The second touch, right? This is a channel that price is moving inside. So this was supposed to be the third touch to hold price down so that price can move down like this, but price didn't. So when this break happened, what are you going to do? You're going to look for break of structure that was responsible for this break of the trend line. So what you're going to do is you're going to mark this as your break of structure. If you mark this, what do you see? You see that you have a breaker here. Then if you mark this as a break of structure too, what do you see? You have a breaker here or a demand zone. So this is a supply turn demand, if you know how to analyze using demand and supply. So this is all what happens here. This is supply, supply or an order block or a mitigation block, whatever works for you. So this is what you are doing, right? This is what you are doing, and this is what you're waiting for. So after the break of a trend line, you are looking for a zone that is higher, or that is if you are looking for buys, like in this case, the zone should be higher than the trend line. If you are looking for sales, the zone should be lower than the trend line in terms of prices. So we are not considering this zone. Why? Because this is way below the trend line. We want this which is above the trend line. So when price comes back, when price retraces right to the zone, you are looking forward for your buys around this area, and you are targeting the next supply zone, which is that one, right? Or you are just going for 1 in 3 risk to reward ratio. So this, guys, helps you in minimizing your risk to reward ratio, because in simple terms, or in what you are used to, or what is taught out there, you will be putting a stop loss here. So that is the middle range of the equity. So with the conventional breakout strategy, your stop loss is going to be put here, where we are saying we are having the middle of the channel, and that's your stop loss. But with the zones I'm showing you here, you are going to minimize your stop loss and try to maximize that the movement of the move. Try to maximize the profits, right here. What do we see? We have 1 touch, 2 touch, 3 touch. This was supposed to be the 3rd touch, but see, it broke out. But this was the last one, the last supply, or the last demand, which we are now using as supply. The zone, which is also a mitigation block, as you can see. So if you don't know about mitigation block, I would want you guys to go and watch a video we did on mitigation blocks, and you come back and really understand this stuff. So this is the zone, break of a trend line, retest of a zone. Your stop loss is going above the zone, and your TP is going 1 in 3 risk reward ratio minimum. So this is what you're doing, guys. You're just considering. So you can just work with 1 time frame with this strategy. You can work with 1 time frame. You don't need a lot of confirmations. You just need your trend line, but you have to know how to draw the trend lines. The trend line should not be very steep like this. This is a very steep trend line. You want to see a trend line that is a bit around 45 degrees and below. That's the trend line you need to be considering. Let's look at CHF. Do you see anything here? You see we have a steep trend line. As you can see, this trend line is very steep, and we are looking for a zone which we cannot find in this area, so we are not considering this. We have GBP USD. If you can look at this, you see what we can see. You see we have a trend line. This is a trend line break that happened here. Then the break of structure is here at the trend line, which means we are not considering this break of structure. We need something above the trend line. So this zone is out. This zone is out. We are not considering this. That's why we did mark this order block for price to retest, because we want something above the trend line. Do we understand? Because we don't have anything below here, so we don't have anything here. You see, this is, so the zone and the trend line should both get taken out, then price comes back to the zone. But in this area, you see, there was no zone that was taken out unless you wanted to use something in this area. But this was not clear enough in terms of your stop losses and everything. So I would consider this, because this was highly defined, and as you can see, price did not take time in retesting and respecting that zone. Let's go to EU. So EU is doing this, and what you can see from this is we have 1 touch, second touch, then the 3rd touch, then we have this breaker. So this is the breaker. Why? Because we have the equal highs up here. So I think, or I would like to assume that you guys know the difference between a breaker and a mitigation block, because I did a video on that, and I want to believe you still remember how these things are different and how do they work. So breaker, and we have the retest, a very nice retest. So this is what we are looking for. If you do enter here, your stop loss goes above and you're going for 1 in 3 risk to reward ratio. Let's look at the last example which we have. So this is Nasdaq, and as you can see, we have one touch. So this is just proof that these things work on any instrument. So this is the break of the of the trend line, but the retest of the zone. So the break, so this was the retest of both the zone and the both the zone and the trend line. So this is what we have. Let's try to go to M15. Let's see what was happening. This was the trend line, touch, right? Then this was the break, and this was the retest. So you can even refine the zones to this break, retest, and off we go. This is what you should be doing in trading the breakout strategy. So guys, this was the breakout strategy, and I hope this was very helpful to you. I hope to see you in the next video. This is Shocks, and I'm out.